Welcome to Financial Accounting. We'll be offering the training through our Ultimate Learning Hub platform. So in today's session, we are going to look at a topic in financial accounting called bank reconciliation. Now, ideally, the cash at bank in the cash book, which is reflected in the cash book, should always be the same as the amount that is reflected in the bank statement. That is an ideal situation. But in all cases, normally these two cash figures are not the same. The reason for the differences is normally because of, number one, there are items appearing in the cash book or in our cash at bank, which is reflected in the cash book, but they do not appear in the bank statement. And also, there are some items appearing in the bank statement which are not reflected in the cash book. And also, number two, also, there are some errors that can be made in the cash book and therefore affects the figures in the cash book. And also there are some errors which can be made in the bank statement and therefore affect the total of the bank statement. So due to these differences between the cash book and the bank statement, we need to perform what is known as bank reconciliation. Now, what is bank reconciliation? Or bank reconciliation statement is a statement prepared to link the bank balance shown in the cash book with the balance that is shown in the bank statement. It's a statement prepared to link the bank balance shown in the cash book and the balance that is shown in the bank statement. So basically that is what we cover under the bank reconciliation statement. Ideally, as we have introduced, these figures, the figures in the cash book and the figures in the bank statement should always be the same, but due to the issues or the items that we have identified, which causes the difference between the two statements, that's why we need to perform bank reconciliation. So a bank reconciliation is a statement that explains the differences between the balance in the bank as per the cash book and the balance at the bank as per the bank statement. Now, what are the causes of the differences? We have said there are two major causes of differences in the bank reconciliation. Number one, there can be items appearing in the cash book, and these items are not reflected in the bank statement. That is the number one cause of the differences between the cash book and the bank statement. And also number two, items appearing in the bank statement and not reflected in the cash book. So let's start with number one, items appearing in the cash book and not reflected in the bank statement. Items appearing in the cash book and not reflected in the bank statement. Now, if we start with these items appearing in the cash book and not reflected in the bank statement, the first item that is not always reflected is number one, unpresented checks. Unpresented checks, an unpresented check is a check issued by a company to a particular supplier or a particular creditor, and the supplier or the creditor has not submitted the document to the bank, has not submitted the check to the bank. So the business gives a check, writes a check to a supplier or a creditor, but the supplier or the creditor has not submitted the check to the bank. In that case, we call it an unpresented check. Unpresented check, therefore, will be shown in our cash book, but because the bank has not yet received it, it cannot be reflected in the bank statement. So that's the first item. Number two, what we call uncredited checks or uncredited deposits. Now, in this case, we have received a check from a customer or a client. The business has received a check from a customer or a client, but we have submitted the check to the bank, but because the processing of the check takes some period of time, It may take 1, 2, or 3 days, depending on the jurisdiction where you operate. Therefore, you have submitted the check to the bank, but the bank has not yet cleared the check. So in such case of a check which you have received from suppliers, you've submitted it to the bank, but the bank has not yet cleared the check. It's known as uncredited check, uncredited check or uncredited deposits. The third item that causes the differences, items appearing in the cash book and not reflected in the bank statement, is errors made in the cash book. Sometimes the accountant can make an error in the cash book when he's preparing the cash book statement, whereby maybe number one, he has overstated or understated some payments. Remember, any payment is supposed to be reflected in the credit side of the cash book. So if a payment is understated, it means the amount in the credit side of the cash book will be understated. If the amount in the credit side is overstated, or if there is an overpayment, it means the amount in the credit side is overstated. So that is number one, an item that is as a result of an error that is made. Number two, deposits which are overstated or understated. Remember that any deposit in the cash book should be debited. So if there is any excess deposits, excess debit entries, it will be an error that is caused. And also if we have understated a figure that is posted on the debit side of the cash book. Number three, deposits and payments misposted. For example, if there is a deposit and it's posted on the credit side of the cash book instead of posting it on the debit side of the cash book. And also for payments, instead of posting it in the credit side of the cash book, it's posted on the debit side of the cash book. It will cause an error. And lastly, overcasting and undercasting of closing balances. So sometimes maybe we have a closing balance. For example, if we have excess cash in the cash book, the balance carried down should be in the credit side. So maybe the balance carried down was supposed to be 1,000 and you have posted it as 1,500. In that case, you have overcasted the closing balance. Or the balance was supposed to be 1,000 and you have posted it as 800. In that case, you have undercasted the closing balance. So there are three main reasons or three main items that appear in the cash book and not reflected in the bank statement. Number one, unpresented checks. Number two, uncredited checks. And number three, errors that are made. The second cause of the difference between the statements are items appearing in the bank statement and not reflected in the cash book. So when we go to the bank statement side, there are some items that appear according to our banker, the items are there, but in this other side of the cash book, those items are not reflected. The first item is bank charges. Now, these are charges that the bank deducts from our accounts for the services that the bank has offered us. So these are charges which include service, commissions, or checks. So for example, if the bank offers us any service, they normally deduct some charge. Number two, interest charges on maybe the loans that we have borrowed, be it a short-term loan or a long-term loan. If it's short-term, it may be an overdraft. So interest charges will not be reflected in the cash book, but will be reflected in the bank statement. Number three, direct debits. Direct debits, an example is what we call a standing order. Now, for example, as the business, we may instruct the bank to be deducting some money to be making some payment on our behalf regularly, maybe on a monthly basis. Maybe there is an insurance premium to be paid. So the bank will be making deductions in our accounts regularly by debiting our accounts. Because when the bank is making a deduction, they debit our account in the bank. That's why it's called a direct debit. So normally, sometimes these deductions are done, yet we are not aware of it. So in that case, it's reflected in the bank statement, but it's not reflected in the cash book. Number four, the fourth item is dishonored check. Sometimes you have submitted a check to the bank, you received a check from the customer, and then the bank has dishonored it. Maybe the check is stale. Maybe it's submitted after 6 months, or it's a post-dated check, or there are insufficient funds in our accounts, in that case, or even the amount written in words in the check is different from the amount written in words. The amount written in figures is different from the amount written in words. In that case, the bank will reject the check. And that case, we submitted the check to the bank. According to us, we were not aware it will be dishonored. And then the bank has rejected the check. So in that case, it's an item appearing in the bank statement and not reflected in the cash book. Direct credits are opposite of direct debits. For example, we have received some money into our bank account, and the bank has credited our account, yet we are not aware of it. Maybe there is some customer who paid directly into our bank account without notifying us in advance. In that case, it's an example of a direct credit. And also maybe there is some interest incomes or dividends income. Maybe you are in some SACCO somewhere and the SACCO has paid some dividends. You had instructed the SACCO maybe when you are registering with the SACCO that whenever there is any dividends to be paid, let it be paid directly into your bank account. And the SACCO has paid, and you are still not yet aware that the SACCO has paid the dividends. And finally, there can be errors that the bank may have made when posting their entries, either on the debit side or the credit side, depending on the side that the bank has made. Such errors may be related to maybe overcasting or undercasting. It can be related to deposits where there is a credit entry, or it can relate to withdrawals. In that case, there is a debit entry. Now, those are some of the items that appear in the bank statement but are not reflected in the cash book. Now, why do we need to perform bank reconciliation? What is the purpose of bank reconciliation? There are three major purposes of bank reconciliation. There are three major reasons why we need to perform bank reconciliation. Number one, to update the cash book with some items appearing in the bank statement, and also vice versa. Also to update the bank statement with some items that are appearing in the cash book. What we have said are the causes of the differences. The second purpose is to detect and prevent errors or frauds relating to the cash book. And number three is also to detect and prevent errors or frauds relating to the bank. So there are three major reasons why we need to do or perform bank reconciliation. Number one, to update the cash book with the items appearing in the bank statement and not the cash book. Number two, still related to the first point, to update the bank statement with items appearing in the cash book and not the bank statement. That is point number one, 2 items. Point number two, to detect and prevent errors and frauds relating to the cash book. And point number three, to detect and prevent errors and frauds relating to the bank. Now, how do we perform bank reconciliation? Bank reconciliation is a 4-stage process. In other words, there are 4 steps that we follow when we are going to perform bank reconciliation, to do bank reconciliation. The first step is to update the cash book. You normally start by adjusting the cash book. Really, to update the cash book with the items appearing in the bank and not reflected in the cash book. That is the first step. Now, what do we mean by this? There are items that are appearing in the bank statement, and those items do not appear in the cash book. That is the first step, to update the cash book with such items. And such items, they may include maybe the bank charges we were talking of, the direct debits, which we talked of, standing orders, direct credits, etc. And also maybe some errors. The second step is to compare the debit side of the cash book with the credit side of the bank statement to determine the uncredited deposits by the bank. So you compare the debit side of the cash book. Remember, the items that appear on the debit side of the cash book, the same items should be appearing in the credit side of the bank statement, and vice versa. The items appearing on the debit side of the bank statement should appear on the credit side of the cash book. The third step is to compare the credit side of the cash book with the debit side of the bank statement to determine any unpresented checks, or to determine if there is any check that has not yet been submitted by, of course, the supplier. And the last step is now to perform the bank reconciliation itself. Prepare the bank reconciliation statement, which will show unpresented checks, which will show uncredited checks, which will reflect the errors in the bank statement. And also, it will start by showing the updated cash balance. In summary, when you want to perform bank reconciliation statement, number one, you compare the items appearing in the cash book and you compare the items appearing to the items appearing in the bank statement, and you tick all the items that appear in both statements. And then you'll narrow down and remain with items that only appear in the cash book and items that only appear in the bank statement. Now, in adjusting the cash book, you first of all take the closing balance in the cash book. You will less any bank charges. Why do we less bank charges? Bank charges reduces our cash at bank. So it reduces the amount in our bank. That's why we deduct it. And remember, bank charges are debit entries in the bank statement. So you'll check for the bank charges in the debit side of the bank statement. Now, when you're adjusting the cash book, any item that is on the debit side of the bank statement will be deducted in the cash book. Any item that is on the credit side of the bank statement will be added in the cash book. So number one, you less the bank charges. Number two, you less any direct debits. Examples are standing orders, regular payments that we were talking of. And number three, you add any direct credits. So the rule is this: in order to get the adjusted cash book balance, any item that appears in the debit side of the bank statement is deducted when adjusting the cash book. And any item that appears in the credit side of the bank statement is added in the cash book to get the adjusted cash book balance. Now, this adjusted cash book balance is the amount that is taken to the adjusted bank statement. So after you have prepared the adjusted cash book, the amount at the end of the adjusted cash book is what is transferred to the adjusted bank statement. But also take note of this first item, balance as per the cash book. This balance is picked from the cash book. If this balance appears on the credit side of the cash book, it will be a positive in the adjusted cash book. I'm repeating, if the item appears in the credit, the closing balance appears in the credit side of the cash book, it will be a positive item when you are preparing the cash book adjustments. But if the closing balance in the cash book is on the credit side, it means it's an overdraft. It means it's a negative cash. In that case, you deduct it. It becomes a negative when you are starting to prepare the adjusted cash book. So balance as per the cash book, when is it a negative? When the amount is picked from the debit side of the cash book, it is a negative when you are preparing the statement. When is it a positive? When the amount is picked from the credit side of the cash book. Once you are done with the adjusted cash book, your total in the adjusted cash book, that is the adjusted, if we go back to this, adjusted cash book balance, that amount is what now is taken and it starts in the preparation of the bank statement. When you are adjusting the bank statement, you start with the adjusted cash book balance. Now, once you've carried the adjusted cash book balance from the adjusted cash book, you add any unpresented checks. Remember, unpresented checks will be credit entries in the cash book. So you check the credit side of the cash book and look at any amount that was credited. It gives you the unpresented checks, apart from errors, of course. and you check any items on the debit side of the cash book, it gives you uncredited checks, of course, apart from errors. Now, when you add all unpresented checks and less all uncredited checks, it gives you the balance as per the bank statement. So, what in summary, what are we trying to talk of here? You need to prepare adjusted cash book. And number two, you need to prepare adjusted bank statement. Adjusted bank statement. We have some few examples that we want to look at. Maybe 3 examples to help us understand bank reconciliation. As we go to the example, remember, how do you prepare adjusted cash book? Balance as per the cash book, you less bank charges, you less any standing orders, or what we call direct debits, you add any direct credits to give you adjusted cash book balance. And then the adjusted cash book balance is what you take to the adjusted bank statement. You start with your last figure in the adjusted cash book, and that is the figure you start with in the bank statement. So adjusted cash book balance, you add any unpresented checks, you less any uncredited checks to give you balance as per the bank statement. So let's read this example. Draw up a bank reconciliation statement after writing the cash book up to date, ascertaining the balances on the bank statement from the following as on 31st March 2003. So we have cash at bank as per the bank column of the cash book. And you have been told this cash is a debit. We said if this cash at bank, that is the closing balance, the balance carried down is on the debit side, we say this means it's an overdraft, it's a negative cash. So when you start with it, the 38,960 will be a negative when you start preparing the adjusted cash book. Banking made but not yet entered on the bank statement. Banking made but not yet entered in the bank statement. This is an example of uncredited checks. Uncredited checks, because you have already banked it, but the bank has not yet reflected it. So it means you took the check to the bank, but it's the bank which has not reflected it. So it's uncredited check. Bank charges on the bank statement, not yet in the cash book. So that is very clear. It's a bank charge. Unpresented checks. You know, unpresented checks are checks you give to suppliers, but the suppliers have not yet taken them to the bank. Standing order to ABC. We know that standing orders are direct debits entered in the bank statement, but not in the cash book. And finally, credit transfer from Ehud entered on bank statement, but not yet in the cash book. So we start with the 38,960 as a negative cash, and then we look for items that were appearing in the bank statement, but not in the cash book. We correct them in the cash book. And then later on, we look at items that are appearing in the cash book and not in the bank statement, and we use them to correct the bank statement. So the best way to solve this question is to solve it through maybe Excel platform. So we can open maybe an Excel sheet, and then we can use that Excel sheet to solve the question. So let's go for Excel sheet. So the same question, I've carried it down here to the Excel. Let's read it once more and then we attempt it. Draw up a bank reconciliation statement after writing the cash book up to date, ascertaining the balance on the bank statement from the following. So remember, when we are solving this question, in our solution, there are 2 statements that we will be preparing. Number 1, we'll be preparing what we call adjusted cash book. Adjusted cash book. And number 2 will also be, once we have prepared our adjusted cash book, number 2, Okay, sorry for that small interruption. We can continue. So we have said number one, we can prepare the adjusted cash book, and number two, we can prepare the adjusted bank statement. So it's basically a two-phased process. So let's start with the adjusted cash book. So when preparing the adjusted cash book, the starting point is to look at the closing balance. What is the balance as per? The closing balance is the balance as per the cash book. Balance as per the cash book. So we start with the balance as per the cash book. We check in the question, cash at bank as per the bank column. So we are operating our currency. Maybe let's assume we are operating. We post. Sorry. So we are operating with cash as per, we said it was a negative, because if it appears on the debit side, it's a negative when you are posting it. So it means it's a negative cash. So when the amount is posted in the cash book as a debit, you start with a negative. When it's posted as a credit, you start it with a positive. So, and then after that, you have posted that the 38,960, you look for you less any bank charges. We check if there is any bank charges. Number two, banking made but not yet entered into the bank statement. In that case, we say that's uncredited. It affects the bank statement. Number three, bank charges. So that is you less bank charges. You less bank charges. So we will be lessing that figure, and our bank charges are 280. You less 280. Next, unpresented check that affects the bank statement. Next, standing orders. Standing orders, we say these are direct debits. So you less the standing order. Less standing order. You less it because it was a debit entry in the bank statement. So you less the standing order, which is 550. You less the 550. And then you look for any credit entries in the bank statement. Let's check if there is any credit entry. Credit transfer from A Hood. So we check for that is credit transfer. You add it because it's a credit in the bank statement. So you add credit transfer. You add credit transfer. So what is our credit transfer? 1890. So those are the items that should be affecting the cash book when we are adjusting the cash book. The answer we get will be the adjusted cash book balance. We'll call it adjusted cash book balance, or alternatively, balance as per the adjusted cash book. So we take the negative 38,960, you less 280, you less 550, and then you add 1890. What we get is 37,900 negative. 37,900 negative. So this 37,900 negative is what will go to the bank statement. It will be the starting point of the bank statement. Now, number two, we go to our bank statement. We start with our closing figure here. So that closing figure there is what we start with. Balance as per the adjusted cash book. That is the figure we bring there, negative 38,900. And then now we make adjustments to the bank statement. You look for any unpresented checks, and you also look for any uncredited checks. So let's look for banking made but not yet entered into the bank statement. You took the money, the check to the bank, but the bank has not yet reflected it in the bank statement. So that is uncredited checks. We say that uncredited checks, we should less them. Less uncredited checks. Uncredited checks. So what is our uncredited check? 60, 60. 60, 60. We less that. So what else? There is an amount we have not yet used. 11, yeah, these unpresented. Unpresented checks are added. These are checks that you gave to suppliers, but the suppliers have not yet taken them to the bank. Unpresented checks. So unpresented checks are added. So our unpresented check there is 1170. So once we get that, we have already made all the adjustments. So we get our answer. Negative 37,900, you less 60, 60, and you add 1170. So what we get is negative 42,760. So this is the balance as per the bank statement. Balance as per the bank statement. Now, this balance as per the bank statement, in this question we were not given. Sometimes it is given at the start of the question. So which means this balance as per the bank statement, it should be the same as the balance that was given when you are as the bank statement figure, which is normally provided sometimes in the question. So this is an example of how a cash book question or a bank reconciliation question is attempted. Let us look at maybe another two more examples. So let's quickly go to a second example. So on our second example, we have on 30th June 2005, the balance in the cash book of Woolworths supermarket was 805.15 A bank statement on 30th June 2005 showed that the supermarket to be in credit by 1,112.30. On investigation, the difference between the two sums, it was established that, number one, checkbook had been undercast by $90 on the debit side. In other words, the debit side of the cash book was understated by $90. So that is an error which should be corrected. That error should be corrected in the cash book because it was an error. It does not affect the bank statement. It's an error that was made in the cash book. So it should therefore be corrected in the cash book. Number two, checks paid in but not yet credited by the bank amounting to 208.20. So this is an example of uncredited check because it has been paid in, but it has not yet been reflected by the bank. And number three, checks drawn not yet presented to the bank of 425.35. So this is an example of unpresented checks. So required, show the corrections in the cash book and the bank statement. So in order to also show that, so we'll look at our solution. And we said, number one, you prepare what we call adjusted cash book. And number two, you prepare what is called adjusted bank statement. So let's start with adjusted cash book as it has been the routine. We are working in dollars. Okay, we are working in dollars. So the first item that we'll be looking at is the adjusted cash book. So in the adjusted cash book, we'll start by preparing balance as per the cash book. Balance as per the cash book, which we have been given in the question. Let's read again. On 30th June 2005, the balance in the cash book of Woolworths supermarket was 805.15. So it's positive because you have been told let me round it to what is to two decimal places. So the amount was 805.15. It's positive, so you put it as positive. Or it can be told credit, you put it as that. So next, checkbook had been undercast by 90 because on the debit side, it was understated. So because it's understated, we need to add it back because it was a debit entry in the cash book. It was understated by $90. So in that case, we need to add that amount of understatement. So add undercast of debit side of cash book. Undercast of debit side of cash book. So it was undercasted by 90. So you need to add that. The other figures are now affecting the bank statement. So with that, it gives us the adjusted cash book balance. The answer we get here is adjusted cash book balance. Adjusted cash book balance. So what is our adjusted cash book balance? The 805.15, and then you add the 90. So this adjusted cash book balance is what you take now to the bank statement. So we said that those are the figures you transfer to the bank statement. They are the figures you transfer when you are starting the bank statement. And then we said, what do? You less any uncredited checks, or and then you add any unpresented checks. So let's read the question again. So you have 208.20 check paid but not yet credited. So that is uncredited check, 208.20. And then you add unpresented check, checks drawn and not yet presented of 425.35. So what you get is the balance as per the bank statement. Balance as per the bank statement. Balance as per the bank statement. So let's less 208 and then you add 425. So what you get is 12.30, 1112.30. Now, how do you confirm that the figure you have is correct? If you are given the bank statement balance, you now compare it to your bank statement balance. So we have got an answer of 1112.30. We go to the question and see if it's the same. So if it's the same, it means our bank reconciliation was correct. You have been told a bank statement on 30th June showed the supermarket to be in credit by 1112.30. And it is a figure we have done there. And that shows that your reconciliation is correct. Maybe the last example, we can go to example 3 in order to close this session on bank reconciliation. So we have example 3. We have a question with us here. So the question reads, the following are extracts from the cash book and bank reconciliation statement of J Rock. So you have been given the cash book debit amounts. The debit amounts have been given. Opening balance is 1740, 88, 73, 249, 178, and the credit balances are daily, Manzon, small, balance has been given. Bank statement has also been given the debit entries and the credit entries. So required in the question is write up the cash book up to date as at 31st December 2005 and also draw up bank reconciliation statement. So we say the first step when you have been given cash book and bank statement, the first step is to cancel out the values. How do we cancel out the values? We tick the values that appears on both sides. So let's check on the debit side of the cash book. We have 88 is appearing on the debit side and it is also appearing on the credit side. So that figure appears in both. So we don't need to correct it. Let's go to 73. Appears on the debit side of the cash book. It also appears on the credit side of the bank statement. Number 3, 249. It appears it appears on the debit side but does not appear in the cash book. 178 also appears on the debit side of the cash book, but not on the credit side of the bank statement. Let's now, and then there is the 54 that appears on the credit side of the bank statement and does not appear in the cash book. So let's go on the credit side of the cash book. On the credit side, the 349 appears in both the statements. We mark what appears in both. 33 appears on both sides. We mark what appears, and 115 does not appear on the debit side. And also 22 does not appear on the credit side of the cash book. So we have marked what appears on both ends. Now, once you have marked that, we now follow the routine that we know. Solution. We start by number 1, preparing the adjusted cash book. Now, adjusted cash book. We start by preparing the adjusted cash book. We are working in dollars. Okay. Now, let's start by looking at balance as per the cash book. Balance as per the cash book. Balance as per the cash book. So in this case, our closing balance in the cash book is on the credit side. So it will be positive. Credit means it's a positive cash. So here it's 1831. It's positive. If it was on the debit side, we could have posted it as negative. Now we post this closing balance in the cash book as balance as per the cash book. And then now we go to the bank statement. Any item on the debit side of the bank statement, we credit it in the cash book. And any item on the credit side, we debit it. So let's look at the first one is a credit. 54 is a credit. What was missing 54? It's a credit transfer. It's a credit. So in the cash book, you will add credit because it's a credit in the bank statement. It's a debit in the cash book. Credit transfer. So credit transfer, it's 54. You'll add it because it was credited in the bank statement. And then there is a bank charge. Bank charge you less because it's a debit in the bank statement. Bank charge. And the bank charge is 22. So what do we get? The amount that we get is 1831 plus 54 credit transfer minus bank charge of 22. So what did we call this? We call it adjusted cash book balance. Adjusted cash book balance. Adjusted cash book balance. Now, this adjusted cash book balance, we have now agreed that it is the amount that will be used to prepare adjusted bank statement. Adjusted bank statement. Now, in the adjusted bank statement, we said you start with the figures in the cash book, 1863. Now you go to the bank to the cash book. Any figure that appears on the debit side of the cash book, you post it, you less it. Any figure that appears on the credit side, you add it. So let's start with the debit side. So debit side, there is the K hood. What does that mean? For it to appear on the debit side of the cash book, it means these are checks that were received. Checks that were received. So because they were received in the bank, we should be deducting it. It's a credit entry in the bank. We are in the bank statement now. You less anything that is debited in the cash book is credited in the bank statement and vice versa. So you less and credited checks, and the person is K hood. K hood. it is 249. And we also have another uncredited check to somebody called Bat, from somebody called Bat, uncredited from Bat, and it is 178. So we are done with uncredited checks. And then now we go to the credit side of the cash book. There is a payment that was made to Small, but it does not appear in the bank statement. So it means it has not been presented. So you add unpresented checks. So the unpresented check is to somebody called Small, who is a creditor or a supplier. It is 115. So we have posted all the entries. So let's get the answer. 1863, you less 249, you less 178, and then you add 115. What it gives you is the balance as per the bank statement. Balance as per the bank statement. So what is our balance as per the bank statement? Our balance as per the bank statement is 1551, $1,551. How do you know that you are correct? If this balance is the same as the balance in the question. The closing balance in the question, you can see it's 1551. It's the same as what we have computed there. What we have computed is 1551. And that is how bank reconciliation is performed. So with these three examples, you can practice more and more to enable you know how to perform bank reconciliation. What is a bank in conclusion as we summarize? What have we said? In a bank reconciliation statement, we have said in a bank reconciliation statement, in a bank reconciliation statement, it's a statement prepared to link the bank balance shown in the cash book with the balance that is shown in the bank statement. And we have said you need to know how to prepare the adjusted cash book, and you also need to know how to prepare the adjusted bank statement. Remember, in the adjusted cash book, you start with the balance as per the cash book, you less any bank charges, you less any standing orders, you will add any direct credits, and you correct any errors that were made in the cash book. And then that closing figure is called adjusted cash book balance. The adjusted cash book balance is the amount that you transfer when you are preparing the adjusted bank statement. Now, the adjusted cash book balance from the adjusted cash book, you add any unpresented checks, you less any uncredited checks, and you make any adjustment for errors that were made in the bank statement. And that brings us to the end of this session on bank reconciliation. I hope we've had an understanding on that, and you can now practice more with the three examples. We are in a position to practice more and more until we perfect on the subject. Thank you for your attendance of the session, and we hope to meet next time in our next session. Thank you.